Hey guys, in this video we're going to keep on the topic of investing in the stock market. In my last video I spoke to you step by step the practical way to get started trading in stock, which includes pretty much assessing yourself, finding out which country you want to trade in, and opening a brokerage account, and also putting some money aside. So now that that is out of the way, it's time for us to start building our stock portfolio. So in the last video I mentioned that there is a little bit that goes in, well, not a little bit, a lot of bit that goes into picking stocks for your investment portfolio. So today I am going to talk about 5 things that you should pay attention to when choosing stocks for your investment portfolio. So when you're purchasing stocks, you go through a series of kind of question and answers to determine if the stock is a buy or not. And the first one that we want to look at is, what is the business model of the company? So the business model is just a fancy way of saying, how do they make money? You want to look at what are the different ways that income is generated from the company. Do they provide a product? Do they manufacture a product? Is it a service that they offer? Is it a combination of all three? Are they a middleman? All those kind of things. You just want to get an understanding of what exactly do they do to generate money. Then once you have established that, you want to look at, is there a future for this line of business? Is this business going anywhere? Is this something that people still want to purchase, or is it something that is going to become obsolete in a very short time? And this is something that you will do on an ongoing basis with the stocks that you hold, as a matter of fact, because even though something is a really good business at this time, later on down the line it might not be such a great business. So just to have a practical example of what we're talking about, if you were to purchase stock right now and you were to look at a company that sells film for cameras, would that even make sense? You know, we mostly take pictures on our phones or on our digital cameras. Developing film is a thing of the past, or more like a little niche industry right now. So would you expect to have growth from a company that is developing film? You would more look at a company that is creating SD cards instead of a company that is selling film, because that business model will have more longevity. That's something that's going to grow in the future. The second thing you want to look at when you determine whether or not you want to purchase a stock is the economy or the environment in which it operates. So even if you have a great idea, are they operating somewhere that can make that business profitable? Is the country that they're operating in a stable one with stable rules, banking systems? Do the people of the country have enough money to support the business in a meaningful way? Is that country a growing country? You also want to look at things like whether or not the company operates on an international scale. So one thing that has been beneficial to many companies, especially in Corona, is not only operating in one country but in several different countries. So you get the benefit of the earning potential of one country as well as the earning potential of other countries. And also, like in the pandemic specifically, when one country was on lockdown, maybe another country was open for business, and so you were able to kind of have that kind of balance, or that kind of what we call diversification, when the company operates in several industries. So you want to look at whether or not it's only operates in their domestic market or if they operate internationally. And within the markets that they operate, you want to know that the economies in those countries are strong enough to provide meaningful revenue for the companies, and also that the systems and infrastructure is doing well. Is it politically stable? Are they prone to maybe natural disasters that you don't want to have to deal with? So having a good understanding of the economy that the company operates in will play a role in determining whether or not you purchase a stock. Another thing that you want to look at when determining if you want to purchase a stock is the stage that the company is in their business life cycle. So companies go through, periods of growth and periods of stability and maybe periods of decline, depending on, the innovations and the products that they're offering at the particular time. So when a company is in a growth phase, and this often happens with newer startups, but can happen with older companies too, when you have a company that is bringing new ideas, innovation, excitement to whatever market they operate in, that is usually accompanied by a growth or a spurt in the amount of revenue they're able to generate, and also the valuation of the stock. Once their concept is proven to be good, the stock price will grow faster, and that is where you get those stocks that double your money overnight. And on the other hand, you have companies that are more mature, set in their ways. They have captured the market that they want to capture, but you don't see much difference coming in a short period of time. Companies like that often have a steady rhythm and pay dividends out from time to time. So the first one that you can expect to see a multiplication in the value of the stocks, in the price of the stock, you usually call those growth companies. And then the other ones that have a more stable pricing but have good dividends payout, you classify those as dividend stock. Those categories aren't necessarily mutually exclusive, but you want to look at what that company brings to your portfolio so you can determine if it is right for you based on the objectives that you have right now. Maybe you are looking for your investment portfolio to provide you with a source of income. You would lean towards a dividend stock. But if you are not looking to get money out right now or not stable money, but you want to see your investments grow, then you look for growth stocks. A fourth factor that you want to look at when choosing stock is, of course, their financial performance. We don't want to buy any stocks of any companies that aren't making money, right? Although I will say that with a grain of salt, because if the concept is something that you believe in, you might buy the stock now because you expect that the company will make money in the future. So you want to look at how much money they are making right now, as well as their ability to make money in the future. Because it is if there can be a scenario where they're making money now, but you expect their income or profits to fall off in the future, or there is a situation where they might not be making money right now because they're investing in their infrastructure or their technology, and you expect that the revenue of that company will grow in the future. So you want to look at their income earning capacity, and of course you want to go with the companies that you expect will earn in the future. Then the final and more technical aspect that you want to look at when choosing whether or not to buy a stock is the pricing of the stock. A company can be really, really great, but the price that you are buying it at right now might be too high. So there are several different ratios and data points that we can use to determine if a stock is fairly priced, if you are buying it at a price that is good, in terms of just making sure that you don't pay too much. So for example, you know how when you are at the craft market, right, and they're selling a bag, and if you as a local were to go to the craft market, you'd get a particular price for the bag, but if a tourist were to go, they would get tourist price. So we all would know, hey, that's a great bag, but no, we're not paying that for it. But the tourist who is not aware ends up paying a higher price for it. So it's kind of like that. So we're going to apply it to stock. So there are certain calculations, certain ratios and metrics that you use to do analysis and comparisons to determine if the stock price is a fair price. And for the less technical persons, this is where your investment advisors come in. This is where your brokers come in. They are going to do the calculations to determine what the company is actually worth. They're going to look at things like the value of the assets that the company has, the earning potential of the company, and determine a book value, or the price that the company is actually worth. Most of the times companies don't trade at a price exactly equal to what the company is worth, But if you can get to buy the shares at a price as close to the actual value of the company, that's a good indicator. So that what I'm talking about is a comparison of the price, which is the market price, to the book value, which is the calculated value of the company. That's what they call the price to book value ratio. And there's another one that is called the PE ratio. So it's the price, which is the market price, the price that you can buy it on the stock exchange, versus earnings, which is the profits that the company makes. That ratio compares what you're paying for the price of each stock versus how much earnings the company makes per stock. And there are general guidelines about what is acceptable in the market as too expensive or not. And you can also use these ratios and compare it to companies similar to the one that you're assessing to make a subjective judgment of whether this is too expensive. Other ratios that you can look at is the gross margin to see if this company, even though it looks like it is doing well, you want to decide if, is it doing as good as the other companies? So there's a lot of different things that go into the more technical side to determine if the price that you want to purchase the share at is a good price. And I think I can go into a lot more detail on that, so you can stay tuned for another video on this topic. So guys, there you have it. These are 5 things that will go into you determining whether or not a stock is a good buy for your investment portfolio. Thanks for watching. If you have any questions, leave them below and we can talk about it. Have a good one.